In today's fast-paced world, many people have traditionally considered keeping cash in a bank account to be a safe way of managing their finances. However, with inflation, low interest rates, and the volatility of global markets, keeping your money in cash may not be the wisest choice in the long run. While cash has its place in financial planning, there are numerous alternative assets that can offer better returns, protect your wealth, and even grow your financial portfolio over time. In this video, we will explore 10 assets that are better than cash and why you should consider diversifying away from traditional savings accounts. From real estate and stocks to precious metals and even digital currencies, we'll cover a variety of assets that can work harder for you than simply sitting in a bank account. Number 1. Real estate. Real estate has long been considered one of the most reliable ways to build wealth. The value of land and property typically appreciates over time, especially if you are strategic about location and market trends. Whether it's buying a rental property or investing in a commercial building, real estate can offer multiple avenues for making money. Real estate generally increases in value over time. Even in times of economic uncertainty, the value of land tends to hold up better than cash. Owning property allows you to generate passive income through rents. This steady stream of income can protect you from inflation and provide an ongoing revenue source. In many regions, real estate investors benefit from tax deductions on mortgage interest, property depreciation, and other related expenses. While real estate requires a larger initial investment than other assets, its long-term stability and income potential make it a great option for those looking to grow wealth beyond just cash. Number 2. Stocks. When it comes to growing wealth, the stock market has consistently outperformed traditional savings accounts and cash deposits. Over the long run, stocks tend to offer higher returns compared to cash savings. By owning shares of companies, you can benefit from their growth and profits through dividends and capital appreciation. If you invest in companies with strong growth potential, the value of your shares may increase over time, outpacing inflation and providing better returns than cash. Many stocks pay dividends, which are cash payouts to shareholders. These dividends can provide you with a steady income stream, especially if you choose dividend-paying stocks. By investing in a diversified portfolio of stocks, you spread out your risk and increase the chances of higher returns. You can invest in domestic or international stocks, as well as in different sectors. Stocks do come with risks, but they have historically proven to be a far superior asset compared to cash, particularly for those willing to invest for the long term. Number 3. Bonds. While bonds may not offer the same level of high returns as stocks, they are a safer investment compared to holding cash in a savings account. Bonds are essentially loans made to companies or governments, and they offer a fixed interest rate over a specified period. Bonds typically provide regular interest payments, which can act as a steady income stream. These returns are often more predictable compared to the fluctuating stock market. Bonds, especially government bonds, are generally considered low-risk investments. While they may not provide high returns, they are safer than holding large amounts of cash. By adding bonds to your portfolio, you can help balance the risk of higher volatility investments like stocks. They can provide stability to your overall investment strategy. Government bonds, municipal bonds, and corporate bonds all offer various risk levels and returns, making them a great choice for investors looking to diversify their holdings away from cash. Number 4. Precious metals. Precious metals like gold, silver, and platinum have been prized for their value for thousands of years. While they may not generate income like stocks or bonds, they are a valuable hedge against inflation and economic instability. Precious metals are often seen as a store of value in times of economic uncertainty. They hold their value better than cash during periods of inflation, currency devaluation, or financial crises. Investing in physical gold, silver, or platinum helps diversify your portfolio, ensuring you have assets that are not tied to traditional financial markets. Precious metals are tangible assets that can be physically stored, providing investors with a sense of security. They can be bought in various forms, including coins, bars, or even jewelry. While precious metals may not yield passive income, their stability during economic turbulence makes them a reliable asset to hold alongside other investments. Number 5. Cryptocurrencies. Cryptocurrencies like Bitcoin, Ethereum, and other altcoins have gained popularity in recent years as an alternative to traditional currencies. Although highly volatile, cryptocurrencies have the potential to offer significant returns over time. Cryptocurrencies have shown enormous growth in recent years. While they are speculative, many investors have seen their initial investments multiply dramatically. Cryptocurrencies are decentralized and are not controlled by central banks, making them immune to the manipulation and devaluation of traditional fiat currencies. As limited supply assets, cryptocurrencies like Bitcoin are seen as a hedge against inflation. With a finite number of coins in circulation, they are less susceptible to the debasement seen in traditional currencies. While investing in cryptocurrencies comes with substantial risk due to their volatility, they have proven to be more rewarding than holding cash for those who can stomach the fluctuations. Number 6. Art and collectibles. Investing in art and collectibles, such as rare paintings, antiques, and even limited edition items, is another way to diversify away from cash. Although these assets may not provide immediate income, they have the potential to increase in value over time. The value of art and collectibles can increase significantly, especially if you acquire works by renowned artists or rare items in high demand. Art and collectibles are often seen as cultural treasures, and their value may not just be monetary but also emotional and historical. This makes them unique investments with long-term potential. In some countries, investments in art and collectibles can provide tax deductions or advantages for collectors and investors. While art and collectibles require specialized knowledge and can be illiquid, they offer an alternative to cash with substantial long-term growth potential. Number 7. Peer-to-peer lending. Peer-to-peer lending platforms allow individuals to lend money directly to others or to businesses, bypassing traditional financial institutions like banks. This can provide higher returns than cash in a savings account, albeit with some risk. P2P lending typically offer higher interest rates compared to bank accounts or CDs, making them an attractive alternative for people looking to earn a better return on their savings. With P2P lending, you can diversify your investments by lending money to multiple borrowers, thus spreading the risk. Many platforms allow you to invest in loans of different sizes and risk levels. P2P lending can generate a steady income stream through interest payments on loans. This passive income can grow over time, helping you build wealth faster than if you just kept cash in the bank. While there is a higher risk involved in P2P lending as borrowers may default, this alternative asset has proven to provide better returns than traditional savings accounts. Number 8. Commodities. Commodities such as oil, natural gas, agricultural products, and other raw materials are essential resources that play a key role in the global economy. Investing in these commodities can be a valuable asset, especially when inflation is high or when the economy is experiencing uncertainty. Commodities often rise in price during times of inflation, as the cost of raw materials increases. This makes them a strong hedge against inflationary pressures on traditional currencies. Commodities can provide diversification in your portfolio, as they are often influenced by different factors than stocks, bonds, or real estate. Global demand for essential resources, such as energy and food, can drive up the prices of these commodities, leading to higher returns for investors. While investing in commodities can be volatile, they can outperform cash during periods of inflation or economic uncertainty. Number 9. Intellectual property. Intellectual property is an intangible asset that can provide substantial passive income. If you have ideas, inventions, or creative works such as patents, trademarks, or copyrights, you can license them to others or sell them outright for profit. If you own the rights to intellectual property, you can license it to businesses for a fee or royalty, creating a passive income stream without having to sell your asset. High-quality intellectual property can appreciate over time as demand for the associated products or services grows. As your IP becomes more valuable, the income it generates can increase. Like real estate, intellectual property can hold its value or increase over time, making it a solid asset to hold in a diversified portfolio. For entrepreneurs and creators, intellectual property is a unique asset that has the potential to outshine cash in terms of long-term returns. Number 10. Private equity. Private equity involves investing in private companies not publicly traded and holding ownership stakes. These investments can offer high returns, but they are typically illiquid and come with a higher level of risk. Private equity investments in startups or growing companies can result in substantial returns if the company succeeds. The value of your shares can multiply significantly. As a private equity investor, you may have some level of influence over the company's operations, which could help drive its growth and increase the value of your investment. Private equity can diversify your investment portfolio by adding an asset class that is not directly correlated with the stock market or traditional financial assets. Private equity is best suited for experienced investors with a higher risk tolerance, but it can offer superior returns compared to holding cash. While cash may seem like a safe bet, especially during uncertain times, It's important to understand that keeping your money in a traditional savings account can erode its value due to inflation and low interest rates. By diversifying your assets and considering alternatives such as real estate, stocks, bonds, precious metals, and even cryptocurrencies, you can put your money to work and achieve higher returns. Each of these assets comes with its own set of risks and benefits, so it's essential to carefully consider your financial goals, risk tolerance, and time horizon before investing. However, by making smarter choices with your money, you can protect your wealth, grow your financial portfolio, and ultimately achieve greater financial security. So that's it for today. If you like this video, then please hit the like and subscribe button for more videos. Thanks for watching.